Good morning, good afternoon, or good evening. No clue what time you're watching it, but it's Monday, Labor Day for you guys on the East Coast. It is going on 4 a.m. on Tuesday over here, and again, apologize for not having this out yesterday, but this thing here whacked me. Oh, right over the top. Top end, not bad. That's just where you get just a little bit of rain, but that energy underneath when it came down underneath there and we got the backside of it. I had water ankle deep inside the house, and we're very happy that it happened because now we know where we need to install some French drains and eliminate that from ever happening again. But wow, wow, wow. Then this morning I did wake up and there was a nice big piece of giant bamboo that had cracked. Landed right on top of the pole that holds my fiber line. Thought I wouldn't have internet, but here we are, online, strong, and ready to go. So, let's get a recap here going real quick. 4 weeks, 4 green weeks in a row on the SPX. Take very strong note of this. 4 green weeks, and more importantly, we got that green month. We got a green month, and we got a green week. Wanted that close above 56.40 to not waste a red week. We got a green week, plus 8 points. Only a 90-point range, same as last week, only a 90-point range. We've been churning, going nowhere. But we got the green close. And a couple of you guys took advantage of that, because we were playing around with that. Here's Tim calling stuff out. What was it? Early in the morning. 56.40 is the green weekly candle. We're playing the bearish calls early in the morning, 3 o'clock, or $3. Where are we this week? I don't know where I'm talking about here. Going, And anyway, yeah, here, 10 o'clock in the morning, 10:30. I want a 56.40 close. That's me. That's what I want. And we wound up getting it. But anyway, come back onto this and we'll go back onto that because, again, you had your ride down on the puts and to get your scalp off as we got down there. And only pure risk money should be involved from here to the close, 56.30, 55.85. Let's get on to where we're at because we got that drop down below 55.85, just below Thursday's low, and whappo, right on up into the upside. And how it played out, just so that you know, again, right there at 12:30, calling for risk. $1 on your 56.30 calls. Somewhere there in the chat room you can look through talking about 56.30 is your risk, obviously. $1 for them. Dropped down 35 cents. Dropped down below $1 for quite a long time there until we got into around 2:30. Closed at $16. Your $100 is $1,600. Your $200 is $3,200. It's just the way things work because they like to crush the VIX on Fridays and come back on over onto the spreads for those that went into the I want a 56.40 close as we were down there. You're talking about 50 cents risk, $4.50 credit. Obviously, you closed completely in the money, and that's a 900% trade. The rare unicorn that you do see, but you did get able to scalp out of your 56.25, 56.20s for about 150% on those. And here we go, going into September. Going into September with the QQQ, posting a green month, up 4 points. 4 points, that's all you got out of the whole month of August. 4 points. So things are not looking good over there. Oh, let's copy this. Didn't get that done. Last week was a minus week. Ooh, I missed that. You had a red week on the QQQ, as well as your red week over on the IWM. Down for the month. But we had a green week over on the SPX. So, again, keep very strong note of that because come Tuesday, tomorrow, as we open up, I will be giving out a risk trade for a close below the open come Friday afternoon, and we will be looking to get at least a $3 credit, if not $2.50, but I'd prefer to get a $3 credit because we know how well 56.25, 56.20 works, because the bitch just keeps paying over and over and over. So, done with this because this is a quick review. I don't see any reason to go into a deep review. However, I will point out, as we did have that full moon break, the full moon break, when we hit over here, we took out that 56.43, and we went here to 56.51.62 on Monday last week. The full moon's been broken, and the full moon's been broken to the upside. So, from a default point of view, we should not see anything significant until we start getting into that September 17th, with September 18th being not only OPEX, September 18th not only being the week when we have the FOMC meeting, but September 18th, Friday, also being the day that they're going to sentence Trump. And having done that, although I am not sharing the audio on this, I use investing.com to show you the clips, the images of where the S&P real-time SPX is during the after-hours trading, pre-market, after-market, overnight, since we're able to do spreads on Interactive Brokers. Here's the commercial that's coming up. Kamala Harris wants to give you $25,000. That shows Kamala Harris's commitment to you. And then here is a Bloomberg endorsement for Kamala Harris. You're going into it, baby. You're going into the election period, and if you ain't ready for that, that's your own fault. We are currently, at the moment, at 56.52. 56.52. So, take that into consideration right there. We have taken out last week's high, 56.51.62, at the moment, which again comes back in here to say upside should be probable into the week of September 18th. OPEX week should be probable. And now we go on to the charts, because what we are still looking for and expecting over on the SPX, we've got this upside gap here to 56.67, virtually guaranteed, just like getting laid on prom night. That's going to be filled, 56.67. As it fills, what we're looking at, and I may or may not have it on this chart, but I do not. We are looking at that 56.67, 56.83. 56.83 being the highly probable target that we are going to be looking at for that to have made that move to the upside before any form of any dip whatsoever that is anything greater than what we have been getting for the last couple of weeks. Take this off, go back to regular size, because again, that's what we are discussing here. And again, what we're talking about is, and the cat is trying to get onto the computer screen because I'm having to use the larger screen. One of the cats freaked out when the water was coming in the house, and they knocked my monitor off of my desk. I don't have a monitor for a couple of days. I'll get into town this week and get a new monitor. 15 days here. We have been trolling this area, rejecting above that 56.30, supporting under that 55.85. Might have been boring, but it's been paying off quite well as we have been in here. Well, now we're going into September, and we're going into September again with, bring you on back. We are going into September with 4 consecutive green weeks in a row. Cover that in a minute. So we move off of here, and again, looking at this SPX from a big, broad, wide point of view, we've had a 10.4% rally off of that bottom, which we knew was the bottom. We've had a jobless claims gap up, a PPI gap up, a jobless claims gap up, and now things have gone soft for the last, call it 4 weeks. 3 weeks we've been trolling in this little zone here. What does it say? What it says is you have extremely minimal upside to go and fuck around with. And if you want to fuck around and find out, go right ahead, my friends. You have all the energy and ability on your own to go forth and do such. 5683, we've been discussing for multiple weeks now. That would be 30 points higher than where we currently are. I hope you capture every single point of it. On the wider view, and again, looking from a technical point of view here, since August 19th, we have had a running sell divergence on the 1 hour chart. All we're doing is bouncing and bouncing and dropping and bouncing in this tiny, tiny little zone. We look at this from a wider view, 4 hour chart. And as you can see here, again, going back to August 19th, it's just been a running sell divergence. Sell divergences and oversold mean absolutely fucking nothing. When you get oversold, you're bouncing. Period. The end. But as we have had here, it's just been a negative divergence running for the better part of, call it 3 weeks now, and you are having absolutely no effect. So again, with this 4 hour being down here in the mid 60s, we should be expecting that the 4 hour will be getting into the overbought zone before we get a drop to the downside. Thus, emphasizing once again that 5683 up above. Now here, I am going to zoom out a little bit because I want to be showing the bigger, broader picture of this, and that being here on your daily. You have had a sell divergence running for the better part of 2 months now. Doesn't matter. On your daily, you have had a sell divergence running, well, not necessarily, but yeah, running here for the better part of 3 weeks. We talked about this wave coming off of the October 2023 bottom. It's almost a year long now. Almost. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 right here, being hidden. Come on out, 11. 11, 12. So because we are going to be needing a final wave, 13 is here. 13 is already in place. 13 is highly likely due to place a fractionally higher high, but that would be your 13th wave, and that would be completing you coming off of your big, broad, wide view. And again, here on your weekly, looking at it from a big, broad, wide view. Your weekly has been in a sell divergence as well. It is not weakening off, but it is not bullish with this 10% run that we have had. It's coming, boys, whether you like it or not. It's coming. This is your cycle 5, your wave 5 of your cycle 5 of your super cycle 5, which we've covered before, and there's nothing you're going to do that will be able to prevent what is coming to you. And if you're not willing to take the penalty that it is going to charge you for taking control of your 401k or your IRA, well, then you're going to eat it when your account value drops below what your penalty would be, and you could have been in control of your own money to play the downside move. Some of you can play the downside move in your 401ks and IRAs. Doesn't matter. They aren't going to be there when you get to be 65. That's the bottom line. So I bring you back to the QQQ. And the QQQ, we're looking here at, 15 days. Yeah, 15 days. So 15 days, boom, you had that big bam, bop, boom. And since we've been up here in the 470 range, we've only been able to reject 485 once because the dot-com tech bubble, AI, going to change the world, it's over. It's done. It's finished with. It's over. But what we have been doing is we keep coming back down here onto this 473, 473, 473, and supporting off of it. 473, 473. So guess what? 473 is your big spot. 473. That's your spot. Anything that you can get up here into the 485 level, your 473 is going to be your wider view going out as far out as you can go, as inexpensive as you can find, using that 470 for your strike selection. 470 puts January, December, March, June, whatever they may be, so that when, and I'll show you in a minute, this does capitulate, you're riding every single bit of it from the inside, not down here on the outside waiting for it to come to you. So I will now venture off into, boom, here's your QQQ. This is what you're looking at short term with the gap up above 485. This is your wider view. These are all your gaps that, whether you like it or you don't like it, they are all going to be filled. Every single one of them. Bring it here onto the IWM. IWM has just been sideways marker. Looking here at what is this, 15 days? I believe it's 30 days. 30 days. So from the big drop, bang, oh, the big drop, the world's ending. You got your jobless claims gap. You got your CPI gap, not your PPI, but CPI. And then your other jobless claims gap because they're going to cut rates. And rate cuts are going to be the greatest thing in the world. And here again, not being able to break up above 221, but more significantly, not being able to break down below 217 and pressure onto that 213, despite having had a red month and a red week. So things to consider here with IWM with that 217 support that we're playing with right now. That would be the strike that I would be playing with if I was playing anything for the month of September. Anything in the month of September, I would be playing the 217 strike. If I was playing a little bit further out, going out to October, going out to November, which captures the election, going out to December, January, whichever it may be, 212, 213, perfect spot. So using 210, which right below the 50-day moving average, excellent strike to consider, gaps to be filled to the downside. Moving on over to the SPX, and again, from the big, broad, wide view of the SPX, and what you're seeing here is the June highs of last year, last summer, going into the October bottom when Israel invaded Gaza, and the rate cuts were being priced in 5, 6 during the course of 2024. Well, we're here into September of 2024. 8 months are gone. We haven't had a single rate cut, and they're still talking about maybe cutting rates. Here's all your gaps. You've only got 4 significant ones that are here during the course of this year, going down here to, the lows from back here in April. But you got quite a number of them that are going to be filled, whether you like it or not. They're all going to be filled. So we leave off with DIA, because DIA is where everything has been headed into. Everything has been pushed into the Dow Jones. Everything. And as we're looking at Dow Jones off the April lows, what we're seeing here now is a 1, 2, 3, 4, 5. Perfectly set up. A little bit of a deep 4, but 1, 2, 3, 4, 5. So possibly 417, possibly 417. And your big breakdown is going to be your 407. Now, 407 seems completely absurd because you haven't seen 407 since back here on August 22nd, but 407 is your break line. 407, after 407, it's 400. After 400, then you start pressuring down into that 395, 396 area. Need to change this because we have a new all-time high, 416.55, 416.30. Minus 5% is at 395, 395.72. So thus, 400, 401, 407, these are your strikes of choice. 397 being your downside, 396 being your downside target for the wider view, and obviously these big gaps to be taken care of. So really where we're at heading into September is a very relaxed, very non-pressured, chilled out, big, fucking easy money if you want to get off of this short-term view. I mean, it's enormous. And like I've told all of you, you're going to get 3, 4, sometimes even 6 opportunities in the course of a year where you're going to take a trade further out that's going to 5 bag. It's going to 10 bag. It's going to 15 bag. And that's where you make your money. And that's what we have. We've got it right here in front of us. Big, broad, wide view. Still good money here every day. Tried to catch that, this can't go higher play with bigger credits. Those weren't working out back here in the beginning of August. That middle part where we already hit where our upside targets were. They kept pushing a little bit higher, just a little bit higher, couple of pennies higher. Well, been taking advantage of that over the last couple of weeks. And again, coming on to the QQQ, which is the bread and butter of the market itself, seeing how it broke down here below 470 in the latter part of last week, things are not good over there, and the Dow Jones can only absorb so much. You got a couple of weeks coming up here into OPEX, coming up into the FOMC, coming up into the full moon. Get yourself ready. Get yourself prepared, because this is going to be one of those ones when you ride it, you want to ride it for the entire election.
So what?
So what? So let's dance.
Man, I got all the flavor, say I'm delicious. I'ma have all you motherfuckers laying in this. I'ma kill all you rappers, I'ma aim with precision. They was rocking with your till they made a decision. All my friends making mans cause they know I'm my bitch. A lot of entertainers crash, I can see the collision. That's it to make the money, I was great at the vision. I finna take all your food and I'ma eat up the dish. Everything up off the table, I'm starving. Seeing all Steve Harvey. Blowing up the dome, no Sharpie. Working out, looking like a Barbie. Kid, better not red boy like Cardi. Yo, what against smoke Bob Marley? This ain't no game.